Hello, Internet friend. Today on Value Side, hoping for lower gas prices? It's just not in the data. I'm David Ravel. Well, each week, various government agencies, industry research organizations, and universities publish reports on the current state of our economy. This new weekly podcast is our effort to connect the dots, putting opaque data together in a more meaningful way. Here's our look at the economic data for the trading week of April 20 to 24. Well, today it's gasoline that's front and center as the continuing conflict over the Strait of Hormuz continues to grab the headlines and strain our wallets with the ever escalating price at the pump. Retail sales were our pick for the number one economic report of the week. It is one of those reports that Wall Street watches like a hawk because it provides real insight into the most important segment of the economy, the consumer. And as you know, consumers account for about two-thirds of the country's economic activity. So any indication that retail sales are climbing is good news. Consumers are feeling good with the money to spend. The opposite is the case when retail sales fall. So the knee-jerk reaction to Tuesday's retail sales report was positive. Look at that. The increase in retail sales more than doubled for March, growing at 1.7% versus just 0.7% the month before. All those high frequency traders were quick to jump on the bandwagon, sending markets higher in an instant. But then the analysts took a closer look. Turns out that this sales growth was due to the cost of driving. That's right. The 1% sales growth came from higher gasoline prices, which increased transportation costs. Take that away, and March sales growth was no better than February's. All this was powered by a dramatic rise in gasoline prices, up 15.5% for the month, something you already knew if you filled up the family automobile. I expect that this trend will continue for the foreseeable future. What's more, we drew down another 4.5 million barrels of gasoline in March, which is on top of the over 6.4 million barrels drawn down in February. In total, the U.S. gas supplies dwindled by almost 10 million barrels over the last 2 months. That's why I believe that pump prices likely will not decline for some time. And it's important to note that this report is for the month end of March. April is nearly finished, but unfortunately we cannot see the current data in real time. So that, regrettably, nearly everything we view in the energy markets contains a month's lag. Now, there was some good news for the business community. Here, confidence continued to improve across several indicators. Standard & Poor's Global measures future business activity with its Purchasing Managers Index. These are the measures of the current activity of the executives responsible for purchasing raw materials, components, and other ingredients used in future production. When the Purchasing Manager Index rises above 50, it indicates that businesses are expanding, which is exactly what they're doing now. The manufacturing, service, and overall composite sector all rose last month, showing that American business are looking forward to a brighter future. However, while business outlook improved, the same was not true for the American consumer. It's evident that those gasoline prices are having a real impact. Each month, the University of Michigan measures the American Consumer Sentiment Index, and April's survey recorded one of the largest drops in the survey's history. For the first time since 1978, consumer sentiment fell below 50, a sign that the most important segment of the economy, that consumer, is feeling the Hormuz squeeze. Look for those retail sales numbers to start falling shortly. And that's a look at the important economic data reports for the week of April 20 to 24. Retail sales rose, but only because of the price of gasoline. We continue to draw down gasoline inventories, indicating that higher prices are likely to continue for some time. Business confidence grew as purchasing managers continue to purchase the ingredients for future production. And finally, consumer sentiment declined dramatically to levels not seen in the University of Michigan survey's history. And that's today's Value Side. For all of our articles and podcasts, visit valueside.com. I'm David Ravel. Value Side is independently written and researched. The views expressed are strictly my own.